why you might want a renovation loan. It's an FHA 203K renovation loan. And Nexa Mortgage has that available through MLB Wholesale as well as other lenders. We shop over 250 lenders to get you the best deal, and credit score can be lower than you expected. The reason you'd want to use a Nexa mortgage agent, such as myself, is because we are the #1 overall broker in the United States. We're the #1 purchase broker by units and volume. We're the #1 refi broker in the US and #1 conventional, FHA, and VA. Some of the things about the 203K loan is it's affordable and cost effective. This is an FHA loan, financing homes that need repairs. It means that borrowers can expand their home ownership opportunities. It's a tool for the community and the neighborhood to be revitalized. It allows FHA financing for properties that would otherwise be uninsurable, such as a fire or exposed wiring or renovations that didn't quite finish up and you have other problems. Water damage, things that need repairing. It provides the ability to market properties that need updating, and it can increase the property's value on average 6% year to date. It's a standard FHA credit guidelines. But as I said, Nexa Mortgage is different than a lot of banks that we can accept credit scores for FHA as low as 580. Seller contributions are allowed up to 6% of the loan price. And you have a contractor submitting information, including the budget, to the lender in advance. We can do a 203K renovation loan on stick-built homes, modular homes, condos, if they're FHA approved, and even log homes. That's great for North Carolina. We can do 1 to 4 units. As I said, 580 credit score and a minimum of $5,000 in repairs. We go by county limits and geographic area. But with an FHA loan, you only need 3.5% down payment. And if you're refinancing, you can refinance 97.75% loan to value. The loan to value is based on the lesser of the sales price or as is appraised value plus the total rehab costs. So for a purchase, you use the sales price or the appraised value, whichever is lower, and then add in all the renovation costs. For a refinance, it's as is value. And you can get 110% of the improved value for the loan or 100% of condos. We'll get into why it goes over 100% in a minute. So we have 2 different kinds of rehab loans. One is the limited and the other is the standard. Now, the limited is intended to help facilitate uncomplicated improvements or repairs to the home that don't require plans, consultants, engineers, architects, or any structural issues. So for the limited, the total cost of repairs needs to be under $75,000 and be non-structural repairs. You do need a minimum of $5,000 in repairs, which is really what you want to do. If it's going to be less than 5,000, you get a lower interest rate with a typical FHA loan. The rehab loan does have a slightly higher interest rate. You do not need a HUD consultant when you are doing a limited, but it is recommended. When it comes to doing repairs, you have contractors working on things. And sometimes you have a general contractor who will then pay the subcontractors. In this case, the limited, you have a maximum of three individual contractors. So you might pay the general contractor, you might pay uh, the painter, and you might pay the HVAC person. So you get two draws dispersed per contractor. So that's a total of six draws, three inspections, and three title updates. The first disbursement is released after closing. So this is really important for the buyer and seller and listing agent and buyer's agent and all the people involved that all of the renovations are done after closing. So it's just like any other sale when it comes to getting your money. But once the sale closes, then the renovations begin. Some of the things that you might do on a limited are minor remodeling and improvements, a new roof. How many homes have we seen that didn't pass the roof inspection? Gutters and downspouts. Gosh, I need new gutters and downspouts myself. HVAC, plumbing, electrical, flooring. That's another big one I see all the time. Painting, windows, doors, well and septic. Another good one here in North Carolina. Fencing, which I find interesting. Modifications for the disabled. This is really beneficial because you are getting an FHA loan and you can make the home improvements last for your lifetime. Appliances. This is really good for first-time home buyers. Basement remodeling and finishing. Let's get that extra square footage if it can count. And exterior decks, patios, and porches. So, really, you can do an awful lot with the 203K limited and make the home of your dreams. For the limited, some of the ineligible repairs are major rehab, structural repairs, room additions, repairs requiring drawings and architectural exhibits, landscaping, site amenity improvements, any repair that will displace the homeowner for more than 30 days. We'll get to the standard and why that is important. For the 203K, it does allow up to $5,000 for the borrower to do their own work. This is a new change within the last year because why spend a contractor labor charges when it's something you can do yourself? The limited 203K process. The borrower locates the property in need of repair or in need of cosmetic makeover. The borrower and seller sign a standard contract to purchase the property. Sales price does not include the purchaser's desired repair costs. Buyer and seller need to sign an addendum to the contract acknowledging a 203K financing. In addition to the standard disclosures, the applicant should also include all 203K required documents. The borrower researches contractors and obtains bids for the rehabilitation costs. All bids must be specific to desired repair or improvements and break out the cost of materials and labor. The appraiser uses final bids to complete the after improved appraisal value. Steps 5 to 10, we'll just leave that with the buyer and myself going over the contracts so as not to bore you. This is an interesting little clause. Any unused or unspent funds must be used to pay down the original principal balance. So there's no cash back. They're going to have reserves set aside. And if those reserves aren't used, your loan balance is decreased with those dollars. As I said, there were some changes, and in the last year, some of the updates to, well, since November 4th of 24, there have been some changes. They increased the total rehabilitation costs for the limited from $35,000 to $75,000. We introduced an annual review process for updating the total rehabilitation costs. We increased the length of time that the work can be completed from the time of closing to 9 months. We increased the number of days a borrower is unable to occupy the property during rehabilitation from 15 to 30 days. Again, this is for the limited. It should be a quick and easy time repair. It allows the borrower to finance the 203 consultant fee. Now, on to the exciting standard 203K for big projects. The 203K standard is good for structural repairs or repair costs exceeding $75,000. Again, the minimum's $5,000 in repairs. A HUD consultant is required. This is a third party giving you input on whether they think the contractor is being reasonable and just a second set of eyes to make sure everything goes well. If the house is uninhabitable, you may finance up to 12 months of principal, interest, taxes, and insurance during those 12 months. The bid is prepared by one general contractor, but it allows for 5 draws during the rehab phase, and the draw schedule is determined by the contractor and HUD consultant together. For the standard, like many things, the eligible repairs are the same as the limited, plus you get a bonus round. You can also do repairs requiring drawings, specs, or architectural exhibits. You can use energy improvements, structural repairs, conversion of a single family residence to a 2 or 4 unit, or taking a 2 or 4 unit and turning it into a single family. You can do a room addition with the standard, a attached or detached garage, landscaping and site amenities improvements, and health and safety issues. So we're all very familiar with mold from hurricanes. So this is a really good product for that. And it just, weather in general has been making life more difficult for homeowners. And some people just want out. They put the house on the market, and you need the right buyer to get one of those homes and get instant equity by putting some labor into the home. Now, What the standard does not include is luxury items, gazebos, tennis courts, spas, outdoor kitchens, and there's a whole list of other things. But let me say, for those in Florida, you can use the standard for a pool renovation, but you cannot use it to add a pool. Same in North Carolina, but it's more important in Florida. So this is the process. We could go over it all, but really, I just wanted to give you an idea of how flexible the 203K standard renovation loan is. Again, there were changes made, and some of those changes are increasing the rehabilitation period from 6 months to 12 months and increasing the mortgage payment reserves from 6 months to 12 months. What this means is when you're buying a home and you can't live in it, you still need someplace to live. So you can finance the cost of the principal, interest, taxes, and insurance, plus your rent or wherever it is that you're having to spend money to live while the renovations are going on. I don't really want to get into the refinancing at this point, but I did want to give you all the information, have an idea of what it looks like. And if you have any questions, please call me, Ruth, at Nexa Mortgage, 828-888-LOAN. Thank you so much for watching, and for all your mortgage tips, go to my YouTube channel and subscribe.